Ladies and gentlemen, Bitcoin has done the unspeakable act of not going further up on a daily basis.
Держали, это нормально. Но ты куда? Куда без меня-то? Ну, что происходит? Шорти!
Markets are in panic. Bulls are shifting seats to the bear side. Dogs and cats sleeping together. When will it end? In today's episode, we're going to cover exactly what's going on with Bitcoin, provide our best technical analysis, and figure out the best plan for our next move. Let's get cracking. Ladies and gentlemen, on the daily time frame, Bitcoin has stalled out roughly for the day, opening up at $90,498 and currently trading at $88,480. That is a decline of 2.25%. Of course, we have pulled a little bit off of the lows, not too dramatically, but overall, we've had 3 days of consolidation following my warning 2 days ago to not buy Bitcoin and that a correction was potentially incoming. Now, we do have critically high volatility as we have had for 3 days now, and we are printing our first overbought potential reversal sell signal on time transformation here. It is important to note that when we do enter into a strong trend, often we will get several reversal signals before the actual top. So in practice, these often act as early warning signs or recommendations to reduce risk and lock in profits before considering your next move. On the 4-hour time frame, Bitcoin is also resetting from critically high volatility. And this is essentially what I expected in the plan I laid out 2 days ago. I drew this blue box to indicate that we were going to go into a volatility reset and essentially trade sideways for several days until Jerome Powell's announcement today. And unfortunately, as expected, Jerome Powell came out quite hawkish today, quite a reversal from his very dovish stance a few days ago. What impact does the potential conflict brewing between the Federal Reserve Bank and Donald Trump's administration have to do with this? This coming right after the last time he spoke. The last time he spoke, as I said at that time, was the most dovish I had seen Jerome Powell in a long, long time. And at that time, the market was pricing in a for sure guaranteed rate cut in December. And he seemed very dovish when he last spoke just a week ago. And then all the lines of inquiry regarding would he step down if Donald Trump said so. This is exactly what I said all week long leading up to this moment. I said the Bitcoin rally might run into some stumbling blocks if Jerome Powell comes out and is hawkish or seems in any way to want to stand in opposition to Donald Trump. So this is going to be a very interesting sequence of events that's going to unfold as we continue to analyze and predict this. But what I said stands. This potentially might throw a spanner in the works, potentially triggering a correction for BTC or extending our sideways consolidation. So I think the best thing to do is simply wait to see which way we break now. Looking at our market dominance, we do see that Bitcoin is maintaining above 60% total market dominance. However, it is down slightly today, about 0.75%. We do see Solana moving up a little bit. Solana currently sitting at 3.51%. That is a gain of about 1.20%. And Ethereum continuing to shed dominance as Ethereum is currently sitting at 13.02%. That is a decline of almost 0.7%. Altcoins, however, continuing to surge. So after a kind of pause yesterday was a boring day for altcoins, and this morning was certainly a boring morning for altcoins, but around the afternoon altcoins really started picking up as Bitcoin really started coming down on the slack. So altcoin dominance sitting around 16.89%, stablecoin dominance sitting at 5.98%, a slight move up from yesterday's 5.83%. So we do see some de-risking from the majors, Bitcoin and Ethereum, and stablecoins going up while that capital is rotating into altcoins. So potentially what would be nice to see is Bitcoin going sideways for a little bit while we prepare for the next potential leg up, while we actually begin to see altcoins continue to perform well. Yesterday was a moderate day for Bitcoin ETF inflows totaling about $510 million. In a surprising twist, while the majority, of course, did go into BlackRock's ByBit, we do see almost as much went into Fidelity's. So obviously Fidelity and BlackRock have the top, with ARK usually in third place. But it's usually that we're seeing, BlackRock's investment vehicle just get the absolute lion's share. And it is nice to see, just for a change, someone on close equal footing with them. So as we can see, this has been a fantastic week for daily inflows. This is the second best week of Bitcoin ETF inflows so far, and we are on track to beat the previous record, which was $2.57 billion in 1 week. We're currently at $2.44 billion. Call your friends, call your grandma, tell them to hit the green button. Now, we are a long ways away from altcoin season, ladies and gentlemen, but now is the time to begin packing your bags. Now, here's where we currently sit, ladies and gentlemen, looking at the footprint chart, looking at some more advanced market analytics here. Overall, Bitcoin hasn't really done much. This is the hourly time frame. Our current market high is 93,421. Price has pushed down for the majority of yesterday and today to come down and come closer to our current levels of technical support around 85,941. So let's just say $86,000 is where current market support is from a technical level, just looking at the horizontal levels of support and resistance. We have liquidations. They don't really get serious up until 92,000. We can actually zoom in and see what the severities of our liquidations are going to be here. So we do have kind of medium leverage liquidations. We took out most of the high leverage liquidations here. Yeah, we took out most of the high leverage liquidations here. So we just have medium levered shorts, starting at around 92,142. And then we have obviously just drifting into lower and lower leverage shorts. So nothing too much to be concerned with here. Our first local significant long liquidation cluster is sitting around 87,410. But I just want to point this out. We essentially have this very large gap in the volume profile directly underneath current levels of support that stretches from about 86,533 down to the current point of control that we can see down here around 76,461. So that would be a huge correction, a very large pullback for Bitcoin. And as we can see, where does price really want to go? Well, it wants to come close to this level if we are going to issue a correction, because this is where all the liquidation clusters are. Look at all these liquidations that are clustered really starting around 82,195 and stretching down to about 78,125. And because this is a low volume node, there hasn't been a lot of price transacted in this area. So this is very similar to a gap on a stock market chart, and just the dynamics of low volume nodes that we have talked about ad nauseum on this channel. Another thing that is quite concerning, if we take a look at open interest, we can see here that as Bitcoin really began its ascent from around 82,000 up to the 90,000s, we can see open interest really start to fall off here. Look at open interest really start to fall off. It ramps up here again, and then basically just dissolves as price goes sideways. We have a brief spike in open interest as people are kind of either aping in long or entering shorts, but all of that open interest immediately goes away, and even then some, as price rejects from the current all-time high. Now, we have seen open interest steadily building up, but look what positions have been going down. Net longs have been going down on average since approximately $89,000. So we've seen net longs closing their positions out in line with open interest dropping. And what positions have been picking up from about the exact same price point? Shorts. So we have seen net shorts go from a delta of 18,000 to a delta of about 6,000. That's pretty significant. And we have seen longs go from a high of 25,000 to the current level of 13,000. So almost half of the net longs have closed out relative to shorts. And so we do see a big rise in shorts as open interest rises. Also, look at the dominant volume here since the current market peak. The dominant volume is on all the sell candles. The dominant volume is on all the sell candles. So this is typically something concerning that we would see when we're looking for a potential trend reversal. So nothing so far. Typical mean reversion strategy so far played out well for me today on the lower time frames. Not committed to a strong directional bet yet. However, this is probably not a bad area to be opening up a hedge short, whether you want to do that with puts through options to cover your long exposure, or whether you just want to temporarily move to the sidelines and wait for a breakout signal, or certainly a lower buy-in signal. But certainly a good time in the market to be taking some profits, to be taking some caution and reevaluating, as I said 2 days ago and yesterday, what you're doing with your life. Looking at capital rotation, similar to yesterday, we continue to see zoo-themed projects dominate the top of the top earners today. Pesto, the baby king penguin, is there, followed by Jonah. Well, we're not even going to talk about that because that's too low liquidity. Hanbao, all right. Peanuts, and Mudeng. Now, I did hear a lot of people saying that Mudeng was going to get listed on Binance. People were saying that on X. I can't a guarantee to the veracity of that. This Omochi, even though this one has a very low market capitalization, this one went from this thing had way sub this yesterday. This thing went up quite a bit today. Also, of course, topping the charts is the Pump Fun ecosystem, the Solana memes, as well as the Boys Club. So Frog memes still continuing to move up quite nicely. Base memes still in number 5. So these are essentially the 5 categories that were pumping yesterday the most. So congratulations to the holders of these coins. Finally, let's take a slightly closer look at the liquidation heat map here on Bitcoin. We can see the significant liquidations don't really start clustering to about $92,000, while we do have some areas of pain and liquidity to potentially sweep from 89,772 all the way up to 91,360. So assuming support holds here and we do get another push back up to these levels, likely the strategic move is looking for short entries if we are unable to successfully close back above $92,000. If we start seeing these liquidations get if we start to see these liquidations at 92,000 and above get hit, I mean, that's a momentum breakout long position. You really want to be exposed to the long side there, with the understanding that once these liquidations clear, you want to be looking for rapid signs of reversal. But for right now, I would strategically be angling for short positions, but at the same time, don't get chopped up. All right, don't get chopped up. If price is going to consolidate, this is often a tricky area for those who might have made quite a bit of money over the last few weeks simply by holding into a strong trend. When the time actually comes where you have to pick tops and bottoms and rotate your capital quite frequently, that can get very tricky, because that is where you'll see the difference between a lucky gambler and an actual trader who can manage their risk and make good calls. So understand who you are, understand where your strengths are. And since we don't have the dominant trend is to the upside, but we certainly have a catalyst, and we certainly have market conditions right now that are showing us that this is entering into a consolidation area where price may break either way, because certainly price has gone up so much that we would be expecting a correction around the corner. At the same time, we don't want to, have paper hands. We want to be able to allow price to pump. So I will continue to relay my advice for this bull market. You want to hold on to your spot positions. That's what you want to do. Continue to add to the 5 to 10 positions, the coins that you've selected that you think are going to do well. Almost always, when we're in a bull market, simply just holding on to the coins that you originally picked is the best option. Yes, as you get more advanced, as you get more skilled, you can, of course, rotate your capital more frequently because you'll have more skill and more discipline. But for the beginner, even to the moderate and under advanced trader, capital rotation is the trickiest thing in the cryptocurrency markets. You get shiny object syndrome and you see your coin, well, it's up like, 50, 80, 100%, but you see these other things over here that are up 1,000%, and you decide to go chase them. You end up generally losing money because you're buying at these local tops on these coins that have already pumped a lot. Meanwhile, you forget about this coin over here that had currently only gone up 100%. But if you would have just let it sit there for the next 3 to 6 months of the bull market, it would have 3x'd. So don't get greedy. Be happy with good gains. All right. You're not going to be the top alpha performer. Just seek to get a little bit better every single day. And my best advice, and what has worked the best for me, is to make solid picks, do a lot of research on the picks that I want, ascertain those picks, pick those picks, hold on to those coins, just hold on, and continue to add either dollar cost average or add on dips. All right. And when you start getting into, when your profits start to be overwhelming or very significant, start selling in small increments. Plan to sell over the course of 2 to 3 months. That should be your goal. You should not be in and out of a coin. 2 to 3 months should be your exiting time. And just remember this for the next time the market significantly dips into a bear market. 3 to 6 months should usually be your accumulation period. All right. This is how you do the long positional trades, the big positional trades. All right. Timing the market cycle. That's how I do it. Now, personally, what I also do is I trade futures. I trade futures for swing trades that are going to last anywhere from 3 days to 7 days. And then I also day trade. And I take those profits and I use those profits to DCA into my spot altcoin holdings. So I hope this advice is helpful for you. Ladies and gentlemen, if you are looking for an excellent trading experience for your cryptocurrency wealth creation strategy, look no further than my exchange partner, BYDFi. You will enjoy 0% spot trading fees, up to 200x leverage on USDT margin contracts and inverse perpetual coin margin contracts. You'll have access to leverage tokens. And one of my favorite things about ByDFi is that for the intermediate to moderate to beginner trader who just really wants to focus on spot, they have excellent strategies for spot trading, for building portfolios, and this is going to be a big emphasis of their copy trading system when it is re-released later on in this month. Right now, new users can register to ByDFi using my affiliate link in the description. If you use that link, you will be able to receive 10% of your first week of deposits back as a cashback trading bonus. So if you join the platform and you deposit $1,000, you will receive a $100 trading bonus. If you deposit $10,000, you will receive a $1,000 trading bonus. Now that offer is good up to $1,000 maximum in bonuses. However, you'll also get, with my link, a VIP level 1 fee advantaged account, meaning you'll automatically be able to double your 24-hour withdrawal amount and receive 17% off your trading fees, in addition to being able to participate in any of our exclusive trading competitions that we host on this channel for our community. You'll have access to over 600 coins, great customer support, and you get to trade with me. And don't worry, it's KYC free and VPN free. So fellow Americans and Canadians, don't be afraid. Sign up for ByDFi today with my link in the description and enjoy your crypto trading experience. Since everyone's getting rich on meme coins nowadays, I think it would pay to look a little bit closer into one of the biggest catalysts that can happen to a non-listed coin, and that is a Binance listing. As we are all aware, a Binance listing essentially means that if you were holding the coin prior to the Binance listing, well, it's time to retire. No problem. So Binance Research recently released this report on how they actually select the meme coins for their project. And I'm going to give credit to Crypt Atlas here. He made a nice kind of summary thread, and we're just going to go through that summary here. Of course, if you went through this, or if you've been paying attention to the markets, you know, listings like Peanut, ACT, and Hippo, of course, just absolutely exploded to the moon. So here's your summary on how to catch the next Peanut meme coin. I will link the full report down in the description if you would like to read this for yourself. So in just general advice here, this is good advice. It's important to understand that memes are all about community hype. And this is what I look for, not only for altcoin projects, but when I look for memes as well. I'm looking for something with really strong community support. I want to see a very active Telegram. I want to see a lot of raids on Twitter. I want to see a large Telegram. I want to see a ton of community engagement. Now, they recommend to check if the coin is related to any news, and then they recommend checking out this Tweet Scout IO, which is a tool for analyzing crypto projects and seeing if top influencers are supporting the project, essentially, and then visiting their Telegram to check how active the community is. So this is important. You know that if there are a lot of influencers or KOLs behind a project, it's likely going to do much better, especially if you can get in early when they're first promoting it. You don't really want to buy into it once it's pumped up so much. So utilizing this Tweet Scout tool can help you see if there are significant influencers that are promoting the project that you're interested in, which could be very helpful. Now, according to the report, it says that Binance focuses on fair launches, and they like to opt for coins that start on decentralized platforms instead of those funded by venture capitalists. I think this is really good. Binance supporting decentralization and fair launches. This is why I really like IDOs, and I really like early launch projects like Solanium that allow you to purchase the Solanium tokens, lock them up, and then get guaranteed allocations to anything that launches on their launchpad. Some good advice here. 97% of all meme coins are dead. So diversify your assets across multiple projects to reduce risks. You know, listen, I'm of two minds on this. It depends on, of course, how much capital you have. But when we're talking about meme coins, I only ever like to invest about 1% of my total assets into one particular project. And I really don't like to spread my capital too thin. I like to pick 5 to 10 solid projects that I think are going to win, and I like to hold those through the majority of the bull market. Now, I'm not always perfect, and I don't always accomplish this 100%, but that's my goal, and that's my advice to everyone that I've mentored in how to do this positionally trading, holding your bags through the moonshots. It's quite difficult to do. And while he is right here that you should avoid putting all your funds in one meme coin, if you spread yourself too thin, you just literally will not be able to pay attention to everything. Like more than 10 coins and you're just gambling, in my opinion. Now, the report did say that Binance likes to focus on meme coins that are culturally relevant, that fit the current zeitgeist, and that have a compelling narrative. So absolutely, you know, the difference between something like, you know, a hippo token, which I think is going to be a flash in the pan, and something like the Department of Government Efficiency is that is so strong in the current zeitgeist and has a lot of future ahead of it. So that's how I look at things. Now, some great advice here. He's recommending checking out Trench Radar. Of course, this is just on Solana to see if developers have bundled the token. He says here, watch the bundle amount closely. Just 10% can trigger a rug pull in less than an hour. Bundling is not always bad, but if you're a newbie, try to stay away from it. So that's good advice here. Again, Binance looks for meme coins with a strong, active community behind them and fair launches that give everyone access, avoiding tokens that are controlled by insiders. So you can utilize tools like Bubble Maps or Etherscan, and the different blockchain explorers will allow you to get a good look at how the holders are distributed. And you want to stay away from projects that are heavily concentrated in just a few hands. You never really want to see anybody owning more than 1 to 3% of the token supply. And even that can be treacherous. They seem to prefer tokens that have a cultural appeal, stories or themes that connect them with a larger audience. They also consider whether there's real demand and trading interest for the coin, ensuring it has the potential to market. So it's a really good article, honestly. Go read this report from Binance Research, getting an insight into how they look for meme coins. A lot of it is just kind of that flowery stuff that Alice there summarized for us, but it's important to remember these things. Quality over quantity. You want to find a winner, and doing your due diligence can be quite difficult when you feel like you should be active all the time. But you only need to make a couple of great trades in the cycle to have made all your work worth it. Or you could make 100 mediocre trades and essentially break even. So quality over quantity. Don't be in a rush to get anywhere. You need to find your winning trade, not somebody else's. And in that spirit, I want to share a tweet from the only Crypto Cred, responsible for tutoring many young traders here. He has an excellent YouTube channel. I highly recommend checking it out. He says here, if you're actively trading, one of the best things you can do is treat each trading day as a blank slate. Act as if you just joined the market, unburdened by what has been. What is the market telling me today? That's much more productive than opening up TradingView and immediately torturing yourself with hindsight bias. I can't believe I fumbled A. If I held X, I would have Y. Why didn't I long X? Don't be a prisoner of the past. Every day is brimming with volatility, so focus on aligning yourself with the present, not dwelling on the past that you can't control. And this is absolutely right. This is why mental health and good emotional discipline and just self-care is very important for a trader. A large portion of my daily routine is just getting centered and being true to myself. Journaling is extremely important. I pushed off journaling for years and years and years because I just didn't want to. I thought it was boring. But once I actually started journaling every morning, I mean, it became so personal, so intimate, and is now so necessary. It's the only way I know to actually get in touch with who the me was yesterday. What was I thinking yesterday? How was I feeling? I arrive at that by journaling it. You think like that your memory of who you were yesterday is sufficient. It's not, because you're changing. Being human is transitory. So the person that you are now, your thoughts, your feelings, your actions today are heavily influenced by what has happened to you, your mood, your diet, everything that's occurred to you today, which is different from what occurred yesterday. So keeping a record of how you actually feel can be fundamental to your success, and centering yourself each day and realizing that every day is a new opportunity to go out there and get a killer trade, one that you could brag to mom about. Now, same here. Income Sharks says, you know what's easier than finding a 100x? Hitting 3-5x trades or 4-3x trades. And listen, you know, I argue, you can see here my reply. I argued the counter of that, which, listen, there's nothing wrong. Like, this is good advice. I think I've even said this before, but I want to just argue the other side of it because I'm contrarian. And I said, to argue the other side of it, you're essentially advocating capital rotation. While holding on to a bag that may never reach Valhalla certainly has wrecked a lot of people, selling too early and rotating into something else and not letting your coin just breathe and grow has ruined wealth opportunities for many people as well. So just kind of condensing some of the things I was saying earlier. Yes, ideally, you want to be responsive to change, and you want to be responsive to what the market is telling you. You don't just want to hold something if it's going to go to zero, but you also can't predict the future, and a rising tide lifts all boats. So my general advice is that if you're relatively new to the markets, if this is your first or second cycle, all right, you want to do the barbell strategy. You want to have a good amount of your assets in Bitcoin and Ethereum, and then you want to diversify into a couple of high quality altcoins that you think are going to do well. All right. Then you can fill out your basket with lower risks in a couple of decentralized picks or some low cap picks, but you can't go over 10 coins. So diversify well, trade futures if you want to ramp it up, trade options if you want to ramp it up. And he's absolutely right here. Not being greedy and willing to just take that 5x and rotate that capital into something else can do very well. However, I also cannot tell you how many traders I've mentored. Even it's happened to me many times where, you know, I got a good return on something and then I sold everything and then I watched it continue to go on and quadruple and do another 5x. So always leave what people tend to call a suicide bag. Not sure if I'm going to get demonetized for that. I call it trophy trading, where you keep like maybe 10% of your total holdings when you sell the top or sell where you're comfortable at. You sell 90%, but you still hold on to that 10% because God forbid if it 5x's again, you're going to cash in. Now, I'm going to direct you to this X thread on X, from Autism Capital. This is an insane thread. I read all of this morning. Saying research, our crack team of autists has put together a deep dive thesis fully analyzing the Kamala Harris campaign, $668.3 million media spending through mid-October. You can just click right here. All of this will be linked in the description down below. And this is an insane report. And this is just an insane report, regardless of what side of the political aisle that you're on. This report, and it's quite long and it goes into quite detail. And this is all in GitHub, so they have all the data. They have all the data here to back this up. So they have, per the FEC filings of the Harris and Trump campaign. I mean, in summary, this just goes to show that Kamala Harris ran an extremely potentially audit necessary, financially irresponsible campaign, blowing money higher than the level of Bloomberg's infamous 2020. Bloomberg spent like $1 billion in 2020 and got 0 delegates, but he self-funded all that. Kamala Harris didn't self-fund this. This was all from individual donors. But the amount of money that they spent and how they do very shady groupings of different line item expenses that should be broken out so they could be audited and verified, they're lumped in together, which makes things like paying for celebrity endorsements or paying for media exposure very wishy-washy. So great report. If you want an insight into how Kamala Harris raised $1 billion and ended up $20 million in debt, here is one good reason why. Because of just reckless, impulsive, almost, I would say, spending per her FEC filings. So definitely go check that out, ladies and gentlemen. That's about all I have for you guys today. Thank you so much for watching all the way to the end of the video. If you found value or gained wisdom from this video, make sure to like and subscribe. It helps out much more than you could possibly imagine. Let me know in the comment section down below whether you think this is going to be a reversal or a local top for Bitcoin. My estimate would be that this might be a local top for maybe a couple of weeks, and then the bull market resumes and we're off to the races. So certainly probably 100K Bitcoin by December, if not early 2025. So stay in there, hang tight. Make sure to join our free Discord, discord.crackingcryptocurrency.com. Link in the description to get access to free signals, free analysis, and just be with a team of traders who genuinely care about growth and personal development. And if you are ready to upgrade your trading experience and really build your own strategy from the ground up and you're tired of gambling, I recommend joining our Crypto Trading Academy, where you'll get access to all of my courses, all of our exclusive indicator suites, our alpha community, and much, much more, including weekly mentoring. I will see you guys in tomorrow's video. Trade safely. Stay sharp.